Well, hello, everybody, and welcome to this week's Middle Class Investor. This is Seth, your host. It is Saturday, the 27th of April, and I want to wish everybody last week hope you had a happy Easter. I took that week off, and then the week before there wasn't much happening, so I took that one off too. Making a recording today because we did have something happen that was significant, and I want to talk about it here. So the previous high was somewhere in here, one of these two, I'm not sure which. And as you can see, we actually made a new high. So this can no longer be wave one down of any type. Okay, it's got to be some sort of corrective pattern. And rather than speculate as to what it is, which is probably, it's probably it could be this whole thing could be A, B, C, in which case we could be in a 5 up, which is we're not at a place where we can determine that. But I think it's safe to say there is going to be some more bullishness. Now, we might have some more bearishness first, and that's really what I want to talk about today. Is I want to cover kind of what the pattern looks like and what we might be likely to see. So I think there's probably a little bit more upside, maybe a little up, down, and then another up. And then I think we're going to have some sort of pullback into this low here, at least. Okay, now if it pulls back into this low and bounces and starts to head back up, then I think we're going to have full 5 waves up, which means this is going to go up for some time. Well, either way, it's going to go up for some time. We've got some more bullishness ahead of us, maybe as much as a year or more. So I think the risk near term, though, is this move down to here at least, and then potentially there's another scenario that could take us down past these lows here that were back in December. So I think, maybe once you see a move down, I would look for the little move up after that to be kind of the last move. And so what we could end up experiencing is some sort of expanding. Well, I can't do it here. There's not enough. Let me see if I can zoom out a little bit and then do it. Yeah, that'll be better. So we could be in some sort of expanding triangle, in which case you get this kind of a megaphone situation, something like this. And if that's the case, then obviously we're going to have some sort of, ABC move down into here, around this 2300 area. In which case this is A, let's say, B. This is one of the frustrating things about utilizing Elliott Wave is, you have multiple options, and you really can't say what you're in until you experience one of those options. So or until something is eliminated. So, for example, if you can see here, if we come down to here and bounce and then roll over and come lower, then you can see that the wave 3 up here would be eliminated. Now, obviously, if we come all the way down here, this is going to take some time, probably as much time as this took, maybe a little bit more. So this started in December, and here we are in April. So, we're talking about, 4 or 5 months here. So we're talking about probably 5 or 6 months here, which would take us to the end of the year. And then a 5-wave rally from there could take another 6 or 8 months. So we're talking about some time here. So anyway, like I said, this is one scenario. I don't know that there's a way to really say which one's more likely than the other. I don't know. I just don't know if that's even possible. Let me, I was going to say, let me back out a little further, but that didn't really help me. Obviously, if we have, significant waves up, if we have a new 5-wave move up, let's say in this case, this would be 1. And let's say we had some sort of pullback into here, maybe the midpoint of this line. Well, then we're going to have a wave 3, which would, now it could be it doesn't do a typical wave 3, as long as wave 3 is not the shortest. So let's say we don't do something typical. Let's say it's more of a the move up is more of a almost like a ending diagonal or something like that. So you get these corrective moves down, and then you get these moves up. And as you can see, this would be wave 3. So if this is 1, 2, 3, 4, 5, 3 is not shorter. It's not the shortest. 1's the longest, 3 is the second longest, and then 5 is the third longest. And this would be something like an ending diagonal. That's possible too. Okay. So ending diagonals look something like that. Now the good thing about an ending diagonal is it marks the end of the trend. So if this happens, if this is the 5 of this larger degree trend, then it marks the end of this trend. That's one of the good things about an ending diagonal, is you can, with some level of confidence, you can say, well, that's over. Whereas you really couldn't say that with kind of the patterns we've had on the screen thus far. So my personal preference is that we get something like this, just because it's easier to predict. And that way, what you know from an ending diagonal is that the move back to the beginning is going to be very, very sharp. So we're going to see some sort of move into this zone right here, and it should be very, very sharp. Happen in just a fraction of the time that this all took to happen. So let's say this takes a year and a half. Well, you might see the ending diagonal end and come all the way back to here in maybe 3 months. That's certainly possible. So there's a lot of possibility on the charts. So technically, I guess there's 3. There's this kind of 5-wave move. Then there's the normal 5-wave move, which would take us to much higher prices. And then there's the megaphone with a 5-wave move. So I think the megaphone with a 5-wave move is the least likely. Of course, as soon as I say that, that'll be the thing that happens, because to me this looks, this right here could easily be a 4th wave. This, we were thinking this was the 4th wave, but this could easily be an A, B, C down to here, and this could be 4. And then this, this ending move could be 5. This is the challenge, identifying where you are in the trend. Sometimes, a 5-wave move will look like a 5-wave move, right? It'll look like, up, down, and then up. So you can, with pretty high degree of confidence, that we're going to there, right? We're going to at least this low. And then if we rally and break that, then we're going all the way to the beginning right here. So, but not all 5 moves are created equal, and therefore we have to be, we have to take it slow. That's why the market's not predictable. People say, my wife was saying that today, wow, you just can't predict the market. And I said, trading the market is not about predicting it, although we do talk about different scenarios here. Trading the market really is about entering positions in lower risk environments and taking profits in higher risk environments. That's really what trading the markets is all about, investing. And you can do that on any time frame. And hopefully we've made that clear here. We're not trying to predict the market. There's a level of prediction, but it's really more about going to the next level of support, the next level of resistance, things like that. Okay? All right. Let's look at, where is my VIX? I'm not seeing VIX over here. For some reason, the VIX is always the hardest to find. There it is. So obviously the VIX is low, and we're probably ripe for some sort of pullback in the market. So based on what I just said, is this a great time to enter the market? Let's say somebody just gave you $10,000. Is this a great time to enter the market, or is this a fairly high risk time to enter the market? Well, it's a fairly high risk time, right? I mean, you wouldn't want to take brand new money and necessarily put it in the market long right here, okay? Because we know, for example, let's just look at what we know right now, okay? What we know right now is that we had this high, so we're near new highs. So we know there's going to be some sort of decision point here, right? Right about this area. So we're right there, right? So we know that the upside is maybe to here, and that there's going to be some sort of pullback likely to here. Okay, these are our guardrails. Okay, so if these are our guardrails, we're playing between here and here. Well, is this a great time to put new money long in the market going up? No. This is if you're gonna put money to work, you want to wait till it gets into this area and then go short into this area. Okay. Now, in a few minutes, we're going to show you some areas that are more favorable for taking some sort of position, either long or short, and we'll get to those in just a second. Let's look at the 10-year Treasury. The 10-year Treasury continues to operate below this trend line. It's in some sort of pullback, and that pullback may be complete. It may not be complete, but certainly this is a logical area for the market to pull back. There was a lot of, you can see here, there's just a lot of congestion, a lot of buying and selling right here. So there's really good support in this zone here. So it makes a lot of sense that the market would stop there. But what we want to see the market do, I think, and let me zoom in again a little closer. What we want to see the market do is we want to look now for the selling to stop. Okay, so let's say we get a candle like this, and then maybe we get a candle like this, with a tail, and then we get a candle like this. Okay, well, this would be a buy signal. This right here would be a buy signal. Okay, so look for something like this. Now, let's say you did buy right here. Let's say you bought right here. Okay. And it doesn't matter that we're talking about the 10-year Treasury. I'm not telling you to buy the 10-year Treasury. This is yields anyway. So if you wanted to buy yields, you could buy yields, which is the same thing as shorting the 10-year Treasury. But just for argument's sake, let's say we've already done our analysis. We've identified this previous low back here. We ran up and we've been pulling back. Okay, so we've got a bullish candle. So a close above the high of the low week in this case. Okay. Not only is it the low of this pullback, but we're also above this low. Okay, so this low is also important. So if you bought here, okay, where would you be wrong? That's the question. Well, if you buy right here, your first sign that you're wrong is right here. If it makes a new low, okay, a new recent low. Now, if you felt like you wanted to give it more wiggle room, you could hold it until it breaks this low. So your risk in this particular case is from here to either here or down to here, depending on where my personal preference is take quick losses. So if you enter here, which is a perfectly rational place to enter, and the market comes up and then breaks this low, I say sell. I say sell right here, because you can always get back in. If it just barely makes it low, then gives you another bullish candle, and then a buy signal, okay, so what? You lost a little money, but it was a little bit, and now you're back in. I don't like letting losses go, because then you start, the whole psychology starts working on you. I mean, there's a little bit of psychology here too. Let's say you sold here, it made a slightly lower low, ran up, and closed higher. You're like, should have held on. No, you shouldn't have held on. You should get back in, but you shouldn't have held on. You had a sell signal and you took it. Okay, so what I want to see out of the 10-year to show me that rates are now moving up is I want to see this low hold and this low hold, and I want to see the market start to go up. So to me, it looks like there's a little bit more pullback here. It makes a lot of sense that you would get something like this, and potentially it makes a new low. Potentially you don't get this candle and it comes all the way back here and makes a new low. Well, then you reset, right? That's your new low. You start looking for closes above the high of the low day. So see, you could have entered here. You could have entered here. And that's a perfectly legitimate entry. And you would still be in, because your stop would be down here. Your sell signal would be down here because you entered right here. So now this is your risk, from here down to here. But I'm assuming, at least for the purpose of this conversation, we're not in this, okay? So we have to look for a new, this is a low day, this would be a lower day, and this would be a lower day. So we have to wait for the low days to to end, and then look for a close above the high of the low day, okay? In this case, the low week. Same rule applies even if you're trading weekly bars instead of daily bars. All right. Hopefully that makes a lot of sense. So what I'm going to look for here in yields is just what I showed you. I'm going to look for it to stop going down and then get a close above the low candle. All right. I guess we could look at the Dow. The Dow's slightly different. It hasn't quite made a new high yet. I suspect it will, though. And notice that this high is just slightly higher than this high. This high is likely to be just slightly higher than this high. So it is possible that, that we've got, a megaphone still. If we close here and then sell off, it's possible there's a little megaphone pattern setting up. So we got to keep that on the table. All right, let's look at some of the other countries. Germany has broken out of this downtrend channel. We're starting to meet some overhead resistance here. This line kind of marks that area. You might wait for a pullback and then try to re-enter Germany. But presumably, it's going to make new highs. Okay, and then that DP, that decision point area, would be somewhere above, just above this high here, somewhere around this area. Okay. Japan, looks a little softer, but this could very well be an ABC pullback into a larger move up, and we have to consider that. This could also be an ABC, and we've started to move up. The key on these, what you want to do on these, is when you see an ABC, whether it's in the bullish direction or the bearish direction. So this case, here, let me try this again. So the way you want to start thinking when you're looking at the market is you want to recognize, okay, this kind of looks like an ABC, okay, and here's my low week. So you want to be aggressive when the risks are low. Okay, the risk is low here. Okay, and if you go through these candles, like here's a black candle and here's a low. Now this closed above the low week, but we haven't hardly even pulled back. So a lot of times when you start to see a pullback, you want to see at least go back to the old low. Okay, and then you start looking for lower and lower candles. And so here's an area where you probably would have gotten in and lost a little money because it turned around and sold off. But notice there's no other areas where you would have gotten in until you got in right here. So this strategy works pretty well. When you see a pullback and you wait for this little down, up, down, and then you start looking for low days, this strategy works pretty good. You would have had a loss right here, but then you wouldn't have had another loss until you got in here, and then presumably you'd be gaining right here. So when you see a pullback happen, we can look at any of them. Now this one didn't quite give you the full V, right? So sometimes what happens is the V is not proportional like this. In other words, this is still an A, B, C, but B is long relative to A. And so you have to be a little bit careful. You have to be, when you start seeing pullback in this third leg here, this C leg, you got to start looking for bullish opportunities, because sometimes B is longer and that'll fool you. But by and large, it's a pretty good strategy to try to identify these low days and then look for a close above the low day for your entry. All right, because I don't want you to, the reason I bring that up is because it's easy to look at it here and go, oh, well, it should be bullish all along through here. Well, okay, yeah, anybody can see that. But you need to have a strategy for getting in down here somewhere, right? You don't want to get in right here. That's the reason I bring it up. It's because it may not be obvious to you that I don't believe you should get in here. I don't want you to think that I'm telling you to get in here. That's not what I'm telling you. What I'm telling you is to locate these ABCs and get in, and then have some sort of entry rule that'll put you in a low risk environment. Let's show some examples. I'm going to give you an example here. Let's go to the euro, because the euro has this. We'll switch to the TOS charts. I got to put that link back in. Let's see, EUR. There it is, Euro US dollar. Okay, so let's change this to a weekly. Yeah, let's make it a little bit bigger. Sorry about that. Let's change this to a weekly here, and notice that the euro ran up, and then you've had this pullback that just keeps going, right? And there could have been areas to enter along the way, but so I want to show you a cool way to think about this. So the first thing you should do is go back to the important high, to the important low, which would be right here. It even shows you on the chart that it's a low, and go to the high, and don't even consider getting into this until you're below 50%. So I guess you could have got in right here. This would have been an okay place to get in and trade this up. But more times than not, if this is the first low, you're looking for something at least in the 62% retracement area. So the bad news here with the euro, and I'm speaking from experience, this happened to me, is you get chopped up a little bit in here. You enter, you make a little money, you lose a little money, make a little money, you lose a little money. It hasn't taken a real clear direction here. And then boom, right here, it found support and made another move similar to this move. So this move is huge, right? It's a big move and a long pullback. And then we finally got a low, and this move is fractally is like this move. In other words, they look the same. If I zoom in, watch this. I'm going to show you here. I'm going to zoom in on just this, okay? And I want you to look at it. Up, down, up, okay? And then I'm going to zoom in on this. Up, down, up. Do those not look the same? Okay? So this is real important, okay? So now, let me get rid of this Fibonacci and use the same principle here, okay? Important low, important high, Fibonacci. Go to low, from low to high. And then look, 50% is here. We're not even going to consider getting in. We could have got in here and then lost here, made a little bit of money. Again, getting chopped up a little bit. But then here we had a low, okay? Let me do our zoom in tool. So here we had a low, okay? So we could have got in here, okay? Making money, pull back, making money. You know, somewhere in here, maybe we give up, you know, I don't know. I mean, you could have given up. You could give up as early as right here because here's a high. Okay, here's a high. And here's the low of that high, okay? So you could have got out as early as right there. Okay, made a little bit of money there. Not much, okay? But we're trying to, this is a rational way of picking the bottom, okay? But then it ran up and then rolled over, made a new low. Okay, so this is a new low. New low. Okay? No close above the high of that low. No close above the high. 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 You don't get a close above this high until this week right here. Okay? So you enter. You enter right there. And then boom, you immediately lost money. And maybe you get out. You're out right there. And now you reset. You're looking for a new low. So it pulls back. That's not a new low. No new lows. Not a new low. Okay, new low right here. New low. Right there. Okay. So now I'm looking for a close above this high. No close above the high. No close above the high. No close above the high. Similar low, but not a new low. Okay, so we don't consider this buy signal. Now what do we have? New low. So we're right there in the euro. We're on a new low, and we are looking for something that looks like that. And then that's going to be a great entry, okay, right there when we get something like that. So I'm giving you a real-time example here of an area where, you know, where it meets all this criteria, okay? So I just went through the whole low, you're in, you're out, new low, you're in, you're out, new low, you're in, or we didn't never get in on this one because it didn't make it never did close above this high right here. But then now we have a new low, okay? So we got a new low, and we're waiting until we get a week that closes above that high. And this is a very low risk entry. This is what investing or in trading is all about. Finding these low risk entries and then holding them to some target, in which case would be this area right in here where we've marked the yellow, which is near this triangle area. Or you can even hold it longer. You could hold it all the way up into this area if you want. If you felt like you could live through some more chopping around. Okay, so there's an example right there, and look at where it is. Here's 62%. Whoops, sorry about that. Thought I was still on my annotation tool. Here's let me zoom back in. So look at where we're talking about making an entry. It's right here at 62%. This line goes all the way across here. It's right at 62%, where a lot of wave 2 pullbacks happen. So this is a great area. You want to be thinking about going along the euro. Now, could next week actually make a new low? Well, of course, and then we could get another new low. And there's nothing that specific about the 62%. It's just typically where wave 2s pull back, somewhere between 50 and 62%. I don't think this will happen, but because this means the trend to the downside would be accelerating, and I don't think that's going to happen in the euro. I think we're bottoming out. I think when you see all this chop, this is bottoming out before you get like that. Okay. All right. What else can we look at? Another one is the U.S. dollar CAD. Now notice. Okay. Here's something I want to point out. I'm not sure that I made clear before. When you have the euro US dollar, so I'm just going to do it like this, euro, but it's actually, let me do it like this. Let me do it like it's supposed to be. Euro / USD. So some of you I'm going to take back to your math days. The US dollar is in the denominator, right? Okay, so if we have a number if this number's decreasing in the denominator, then what's happening to the euro? It's increasing, right? So if I have let's say x over 0.5, okay, and then I have another number y over 0.2. If you didn't know anything, and let's say x and y were equal, just as an argument's sake, okay, so x equals y, which one of these numbers is greater? Is x over 0.5 greater or y over 0.2 greater? Well, this one's greater, right? Because it has a smaller number in the denominator. So if the US dollar is decreasing and it's in the denominator, then that must mean the euro is increasing. The combination, the pair is increasing. Usually that's the case. Okay. Same thing with with some of the other pairs. So you have the euro US dollar, and then I didn't mean to X out of that. So let's say you got the euro US dollar. So I'm just going to do E/U for US, okay? And then you got the US Canadian dollar, okay? So would you expect, should these be moving together, or are they going to be moving apart? Well, they're going to be moving apart, right? Because the US dollar is in the numerator versus the US dollar in the euro US dollar is in the denominator. Okay, so let me show you what I'm talking about. So I just pointed out a decent opportunity in the euro US dollar. Now I'm going to look at the US dollar CAD, which I got to type in. And you have roughly the same kind of opportunity in this one. Now, it's not quite as clear because you got the the euro was going down for a long time, so this one's going down, and then you had this, you have to kind of know. I mean, here's the long move down. The difference one is this one went A, B, C. Okay, so it went A, B, C to here, big trend. This is big ABC. We had to move down, and then so an ABC, A, this looks like B, so we're going to have a C down in this case. So instead of the euro, like the euro is going to go up, the US Canadian dollar is likely to go down. And what we want to do is use the same methods, but when it breaks down below here, trade it down into, this area. Well, I mean, your first stop is going to be in this area, this 1.799 area, 1.8. Your second real good area is right down in here, 1.05. So you have, I think the euro maybe looks a little bit more obvious, but they're both decent opportunities. Now let's look at oil. And then I got to shut it down for today. So oil, you know, you got this huge run up, you got this huge AB, what looks like an ABC. And maybe the ABC is not complete, right? This could be A, B, and then this could all be C. You know, where C is 1, 2, 3, and then 4 and some sort of triangle, and then down C. So oil to me, it's been a kind of a challenge, but I think anytime you're in a triangle, you got kind of an A, B, C, A, B, C, A, B, C. So I would say likely right now we're in an area where oil is probably going to start selling off. Do a little bit better job of that. And, you know, I think a likely area for oil would be, you know, to trade its way down into, you know, into the lower part of this triangle. Of course, I've had that on there for some time. This could take a little longer. It might not be as sharp as this move. It might be a little more choppy, but then finally make its way down here into this $35 to $40 area, and then bounce and make a lower high. So, you know, a high somewhere, you know, in this area around 70 next time. And then keep doing that until it breaks to the downside on the triangle. All right. Oil, commodities in general, you have to be, it's hard to get moves like this in the commodities where they're just, you know, these long moves. More times than not, you're getting stuff like this where it's chopping around quite a bit. You just got to be careful about that. All right, gold. I want to talk about gold because gold is definitely one of these areas where we're in a place where there's opportunity. It's not huge opportunity, but opportunity nonetheless. So gold has been in some sort of triangle, right? So A, B, C, D. A, B, C, D. So we're just about done with this pullback. It's right here. Notice it's right here in this little yellow area that we created. I don't know that it's over yet. You might get a little bit more downside. One of the things I use is a 4-hour chart to help me pick kind of the end. Oh, never mind. I don't have it up here, but I use a 4-hour chart and a MACD histogram. And a 4-hour chart a lot of times will pull back and curl up when these are finally through going down or going up. If it's I'll have to show you another. Well, I don't know. Maybe I can just show you real quick. Let's do studies, add study. Studies popular. MACD 2-line. Let's do the MACD 2-line. Okay, so we're on a 4-hour, and see it's already kind of curled up. But what I use this for a lot of times is my shorter term entry. You can see here where it starts to curl up. We only got one more low, and then it went up. So anyway, I use that sometimes for the shorter entries. Oh. Anyway, but let's stick with the weekly chart for now because that's what we've been using. And you can see here on the weekly chart, the MACD is kind of dipped below a little bit, but it looks like it's curling back up. Zoom in a little bit. Yeah, see, it looks like it might be curling back up. So you might have one more down here, maybe into this 1250 area, and then rally from there. Okay, it just doesn't look like this wave E is quite low enough yet. It could be, but it doesn't look like it is to me. Here's the fourth wave low right here. So we're already at the fourth wave low. It could be. Maybe silver. Maybe silver's an easier. I haven't looked at silver, but let's look at silver. Yeah, so silver looks maybe a little bit easier. You got a low, you got a rally, you got this pullback that looks more ABC-ish, and you got to close above the high of the low day. So, or the low, of the low week. So maybe silver's a better entry right now. Let's just look at that. I'll be looking at that myself next week. So So notice the pullback first. First of all, we got a run up, which looks kind of 5-wave-ish, right? We got a 1, a 2, a 3, a 4, a 5. Okay, that's what you want to see on your first move up. Okay, and then it looks kind of like we got A, B, C, and then maybe this is an X. So sometimes you get a double ABC. So you get ABC, which is W. And then you get X, and then you get a Y. So you get some move down in a 5-wave move. So something that looks like this. This is maybe wave 3. Well, this can't be wave 3. But anyway, it could be another ABC, and then in which case you're looking for Y. So now what we're looking for is a close above the high of the low day. And right now, this right here, this candle right here is our low week candle, right? So if we get a candle like this next week, then by all means, let's look at entering silver, SLV, and trading it up to somewhere above these highs. Let's see what that would look like. So if you enter silver next week and you trade, let's look at the big picture here. ABC, so a minimum you're looking to move to like maybe 22, but then we could be seeing a move as high as 25, let's say. So those would be pretty good. From 15, you're talking about somewhere between a $7 and $10 move in silver, so that'd be pretty good. So I would look at silver. I'd keep an eye on silver. I'd keep an eye on the euro. I would not be entering long my 401k right now. It just looks a little risky. I think we're ripe for a pullback. Although, having said that, we're ripe for a pullback. We'll probably have an up move first, and that should be limited given where the let's just go back to the S&P 500. Given where the S&P 500's previous high was, so the previous high is here. We're looking for for this to stop somewhere in this right around the 3,000 area. It might, who knows? It might go right to 3,000 and stop. Might fall a little bit short. We don't know. But definitely, we're entering a place where where the market's probably going to want to pull back some, at least into this 2,700 area. Okay. All right. I hope that does it for everybody. I hope that helps you in how to put your money to work in your 401k. And if you've got Forex or you're investing in a little bit of gold and silver, either to buy it longer term or just to trade it in a brokerage account, hopefully those are helpful as well. All right, everybody. We'll see you next week. We'll probably see a turn or the beginning of a turn in the market this week. So I'll definitely be doing a program next week. Okay. Thanks, everybody. Have a great week. See you next time.